Hello everybody. In the previous videos we have seen a divergence trading, and then we see a divergence trading using RSI. So this is a continuation of that series. It's on divergence trading using MACD. So just to recap on the concepts, we have a bearish divergence which gives a weakness in uptrend, which means there is a reversal. So this is formed by higher highs in the chart and lower high in the MACD. Similarly, we have a bullish divergence which will form the lower low in chart and then higher low in MACD, and this gives a weakness in the downtrend, and there is a possibility of uptrend. Okay, so now we understand the strategy. So here, along with the strategy, we'll see how at what situation we'll take a trade, whether it can be a buy or a sell. Okay, that is simple. That is also using a MACD. Okay, so here we can see there is a downtrend, and then we see the lower low in the price, and then we see the higher low in the MACD chart. Okay, so when we'll take our trade is simple. Whenever you see the green color in MACD, you take a buy position somewhere. So and then this will be your stop loss target. Similar to the previous strategy, it can be a resistance or till you find the reversal setup, or you can go with 1 is to n reward ratio. Okay, so it's up to the traders comfortableness. If you are a beginner, I recommend you to trade go with 1 is to n ratio. It can be 2, 3, 4, depends on you. Otherwise you can go with your resistance. These two are for kind of beginners. For someone who already trading in experience in the market, maybe can go with the reversal set. Okay, so this is an example for the bullish divergence. Again, there's a one more price chart from the lower low and MACD from the higher low. We take a buy position somewhere here, so which comes somewhere here. So this is our stop loss. We take a buy position here, and then see the price went up drastically. It gives close to 20-25% in the span of 2-3 months. Okay, and again we have one more. So I didn't discuss the stock. So it was Dover 1-day chart in the first example, and then second we have Reliance, and then third we have Apollo tires. Okay, so here it's not 100% lower low, but still it gives a kind of a lower low in the chart, and then we have a higher low in the MACD, so which means there is a possibility of weakness and downtrend, and there is a reversal. So we take a position somewhere here, okay, so the stop loss is the entry candles low, and see that how the stock went up. It covers close to 40 percentage the return wise. Okay. Yep, now we see the bearish divergence. There is a uptrend, then we see a higher high in the price, and then we see the lower high in the MACD. You take a sell position when you see the green. Okay, so that's somewhere here. So here initially the stop loss triggered, and then again once you enter in the next green signal, next red signal, then you can see the movement of the stock. Okay, it went down even further down. Then we see the LNT. Okay, So here, as you can see, it forms the higher high in the price chart, and then it forms the lower high in the MACD. It was a kind of uptrend, and then see the stock. Okay, it actually moved from close to 1000 to 600. So this also gives us a close to 30 to 40% return. You take a sell call when you find the red color histogram in MACD. Okay, there's a one more which is in an favorite one, ITC. So we see the higher high in the price chart, and then we see the lower high in the MACD chart. We take a sell position when you find the uh, red color, so that entry candles low is the, sorry, entry candle high is the stop loss. We take a sell position and then see the movement of the stock. It corrected more than 50%. Okay, so that's how we combine the MACD divergence. We added a kind of the entry signal in the strategy, which help us to take a correct position. So here here we have a higher risk reward ratio. So 1:2, if you see the stop loss will be maximum of like 1% or 2% of the stock price. But if you see how much correction it or how much profit it gives on buy and sell side, will be close to 30-40%. Okay, which mean we simply have a risk reward ratio of I can say 1:20 simply. Okay, the 1% is the risk or we are taking, and 20% is the return we are getting from this strategy. So this we don't usually find, but if we get to trade in this strategy, it gives us a huge profit both on a buy and sell side. Okay, there's a one more on the, so this forms the higher high in the price chart on the, and then it forms the lower high in the MACD. We take a sell position somewhere here. We keep the stop loss, sorry, yeah, this is the stop loss. We take a sell position and see the downtrend. Okay, it corrected close to 20%. And if you see the stop loss we are taking, it will be like very minimal. That's how we have to pick up the strategy where we have a higher risk reward ratio. Okay, even if we have a couple of failures, but due to the strategy of having a higher risk reward ratio, at the end you will have a huge profit, and okay, and the loss will be minimalized. Thanks for watching this video guys. Hope you like this strategy. Subscribe to my channel.